How is it going, traders? Welcome back into my screen. My name is Best Man Depre Kelsey Amakri, and it is a privilege to be sat here with you guys. And today I bring you guys an impactful episode of the Forex Weekly Insight, which is one of the most anticipated segments of my YouTube channel. We're talking about the number one reasons why most Forex traders keep blowing their accounts. I think that again, the number one reason why most Forex traders keep blowing their accounts. I don't care what strategy you're using. If the Forex market ain't giving, eventually your strategy is going to break along with your account. You have to understand the Forex market moves from phases to phases, and we are currently in a phase where the market does not give a shit about your strategy, your rules, or your risks to reward. Because a lot of you struggling traders don't know this, you keep placing trade or you keep forcing trade, the trade ain't banging, the trade ain't giving. It may not actually be your fault. You just find yourself trading market conditions that are not favorable to traders. I'll be rather have a theoretical section with you guys. I'll be using the live chart to pinpoint areas where most of you have blown your accounts and how you can actually maneuver your way around certain market conditions. Best believe I've been doing this for over 10 years, so I've seen various market cycles and formation played over the years. It is those who have lived certain experience that can give you the best knowledge and how you can maneuver your way during those cycles or conditions. Once again, if you didn't get my name is Best Man Depre Kelsey Amakri, and I'll be catching you guys very shortly in my other screen. Peace and love. Alright guys, welcome back into my screen, and very shortly we will be breaking the market down and as well identify areas as to why you're blowing your account and how you can maneuver your way around that. Before we start talking about all this amazing stuff, please do hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. Once again, my name is Best Man Depre Kelsey Amakri. I'm a Forex trader with over 10 years trading experience. The least you can do is smash the subscribe button, the bell notification, so you don't miss out on our subsequent video. We give out this information for free. No proprietary information, no hypothetical stuff. We analyze the market before and after the market play out. This way you get to see the thought process of a profitable Forex trader before the place a trade and after the place they trade. The least you can do is smash the subscribe button, which will be very helpful to us and also very helpful to you. I'm going to give you 5 seconds to do that. JESUS. Thank you for smashing the subscribe button. All right, before we start talking about or looking at areas where you've been blowing account, let's look at a trade opportunity that's available for the week, and we can put money in our pocket. You have to understand, if one industry is not doing well, the other will be doing well. And for me, we have been training for over a decade. I've come to understand that liquidity moves from one industry to another industry. As sometimes you hear the Forex market end moving, end banging. Best believe liquidity has moved from the Forex. Please, when I say Forex market, the Forex market means currency pair, right? It means currency pair. You hear that liquidity has left the currency. The currency pair is not trending. Liquidity have left. We start hearing about futures, stocks, indexes. For this year, gold has been doing well. The stock market has also been trending. So let's look at all of this and how we can put money in our pocket. And best believe the strategy that I preach on this channel, which is the top-down analysis, works on every major industry. All of the industry, the stock market, Forex, futures, metals, it works. Okay. So let's start with BTC. BTC has been bearish. All right, it has been bearish, and for the first time since this year, we've broken above the bearish trend line. So this is the bearish trend line that has been holding BTC for a while. Broken above it, right? We've breached it. Not only have we broken above this trend line, we also broken above this major area of resistance. So once price breaks above a resistance area, automatically that resistance becomes support. So before we did break out from this trend line along with this major area of resistance, we were having issues of breaking below this area right here, right? If you can see this area right here, let me zoom in properly so we can see this area properly. We are having several issues breaking below this area. We did form a double bottom. It was the first bottom, second bottom, double bottom are bullish reversal sharp pattern. Can reverse a trend from being bearish to now being bullish. So double bottom reversing this trend from being bearish to now being bullish. Also broken above a trend line and a major area of resistance. On the daily time frame, you can actually see the breakout of this trend line and also this area. Price broke above it, came back to retest it, and we started pointing to the upside. Once we came in here, we took out this level. On the last episode, I said wait for the breakout of this level, wait for price to pull back into this level, wait for a bounce, a bullish bounce, a continuation to the upside will be very evident. And if I draw my trend line from swing low to swing high, you will realize we had confluence. This was the third touch of the trend line, and today being 14th of May, we had this bullish engulfing candle that engulfed previous day of trading. So this just tells you a push to the upside is very imminent. And if I draw my Fibonacci from swing low to swing high, this came rightly into the 50% Fibonacci level. So we had confluence, we have support area, we have trend line support, we have normal support, we have Fibonacci bounce, all three giving us an optimal reason as to why a push to the upside is very imminent. And we also have a candlestick bounce, a bullish engulfing candlestick bounce. So this was one of the reasons as to why we say when price comes in here for the third touch of a trend line, and once you see a bullish candlestick bounce, you should start looking for buying position to the upside. Now I'm going to be very transparent and very honest with you guys. I actually saw this sometime around the morning. Pardon me, let me get the trend line properly. I don't need this anymore, so I'm going to take out this trend line. I don't need it anymore. Let me make it visible at just the daily. Cool. Now I saw this morning. Price came in and we had this bounce somewhere around here. But I was too scared. Again, I was too scared to click the button, to click the buy button. Why so? I'm going to tell you guys why so. Ideally, I would have jumped in for the buy at the break of my counter trend line. Sorry. Those of you who have been following me very religiously, you know I love when price take out, break above an area, pull back into that area, and we have a bounce. And I will draw my counter trend line at the wave. A 4 hours break of my counter trend line, I'll jump in for the buy. My stop loss will come below the support area, which is somewhere around there, and execution will just push to the upside. But when I looked at this, I saw this area right here. This area got me scared because at the 100% retracement level, which was this first breakout, that we started reversing all the way to the downside. We tried breaking above this area, we failed, we came back down again. So this was looking like a double top at the time, although even though we had this bullish engulfing candle that broke above this area this morning, sometime around, is it 9 or 10 a.m. West African time, I wasn't really confident because I can buy somewhere around there. My stop loss would have been here, and price comes here and start pointing all the way to the downside to come and threaten my stop loss. So I was a little bit scared because the risk to reward wasn't really great. Even though my overall projection for BTC was somewhere around this area right here, $93,000 per coin, but I was a little bit scared because we can just, touch here and start reversing all the way to the downside. So I didn't really click that buy button. I have to be very transparent with you guys. There's no point coming here to lie. So the rules of engagement will be, if indeed price really wants to head to the upside, come out and take out this level, come out and break above this level. If I see a proper 4 hours break above this level, I'll be jumping in for a buy. Immediately I'll be jumping in for a buy. A push to the upside will be very much likely, because you can buy somewhere around here, price can come here and start pushing all the way to the downside. Trust me, it is possible, because we've had several rejection around this area. But I'm going to be very honest with you guys. I'm 70% sure this market is going to head to the upside. This is a failed double top, right? This is a failed double top. If I really want to reverse all the way to the downside, at the the second leg of the double top will just come and break the shoulder line. What happened? We stood firm at the shoulder line, and not only do we stood firm, we've broken above this bearish trend line right here. So I feel we might actually push all the way to the upside, but to be on the more safer side, price should come here and take out this level. If the risk to reward was very much, okay with my account, I would probably jump in on this trade. But because I trade my own personal account as well as investors' accounts, there's no point in putting my account at risk and also as that of my investors, right? So I decided to sit on my hands. So the route of engagement will be wait for the breakout, a daily or a 4 hours, not a 5 minutes, okay, 30 minutes breakout, a 4 hours, 30 minutes breakout from here. A push to the upside will be very much imminent. But in this scenario, you start seeing price start forming some bearish engulfing candles around this area, we start pointing down, and price comes back and take out this level, which is also in confluence with the trend line. The whole buy setup has been validated. I think that again, if we start seeing some bearish engulfing candle bounce here and we start pointing down and price comes down and take out this level, the whole buy setup has been validated. All right, don't worry, I will come back here, reanalyze the market. We can see how we can actually jump in for a sell. But all things being equal, I think this market will actually push all the way to the upside, because this double top has been violated. This is the field double top. And if I'm looking at this properly from the bottom, this is looking like we've also formed another double bottom. First bottom, second bottom. This is the neckline of the double bottom. So price should break above here. Once we have a breakout of here, I'm waiting for a break above this area. So the route of engagement will be break above this area, a pullback into this area. Don't buy at support, please. Never buy at support. Wait for a break of your counter trend line. Once you have a break of our counter trend line, we can start buying all the way into this area. So that's it for BTC. Wait for the breakout, a pullback here, a bounce of here. $93,000 per coin will be very evident for BTC. But if we start seeing some redness around this area, will start pointing down, price comes back and take out this area, that means the whole buy setup has been violated for BTC. Now let's look at the elephant in the room, the guy most of you have been trying to trade and you've blown your account. I'm going to look at this from the 4 hours time frame before I look at it from a big picture perspective. Most of you intraday traders probably would have been buying somewhere around here. You probably would have said, okay, so let me show you what tends to happen with intraday traders. They probably would have seen price run into this major area of resistance, and we've had all this bounce. Most intraday traders would have assumed this to be a break of a trend line. So let me zoom in properly. So they would have drawn their trend line like this, the counter trend line, and say, okay, let me take this off so you understand what I'm talking about. Would have drawn the trend and say, okay, this bearish trend is over because price has run into a major area of resistance. We've bounced from here, we're pointing down, we've taken out this trend line. This is a retest, a correction to the downside should have occurred. Most of them would have probably sold somewhere around here, somewhere around this level. This is what they would have done. They would have, okay, we have a level around here. So they probably have taken this bounce. They would have sold somewhere around here. Their stop loss would have been here. They would have been in profit all the way down here. And what happened? Price jumps up back and smash their stop loss, because most of them would have been targeting this area as the overall target. What happened? Price jumps up, smash their stop loss around this area. They've now assumed this to be a pin. Oh, this is a pin. Oh, I just came to fulfill. I came to do a stop loss hunt. Most would have jumped in again around this area for another sell. Price push all the way to the downside again. Okay, they've been in profit all the way down here again. Stop loss becomes their case again. This is madness. This is madness. All right, this is madness. This is why you need to look at the market from a big picture perspective. Now let's go to the monthly. Let's look at the euro from a big picture perspective. If you've been following this channel very religiously, you will notice, we've said it before, the euros has run into a major area of resistance, which is this trend line, which is around there, and we are having issues breaching above this area. This immediate trend looks like it wants to reverse to continue with the major trend, which is bearish. I take that again. This immediate trend has run into a major area of resistance with somewhere around here. It looks like it wants to reverse to continue with the major trend, which is bearish. How do we know when a pullback or an immediate trend wants to reverse to continue with a major trend? It will always run into key areas of the major trend, i.e. support or resistance or trend line from the higher time frame. Best believe once you see a reversal sharp pattern like double top, head and shoulder, inverse head and shoulder, double bottom, it's likely that immediate trend or that pullback will reverse to continue with the major trend. Now, hear me use the word likely, not a must. You have to understand the forex market is not an exact science. The forex market is moved by socio-political factor. It is not an exact science, but that story for another day, right? So, from what I can see from the higher time frame is we are trying to form a case as to why this immediate trend will reverse to continue with a major trend. If I look at it properly, you'll notice this is a left shoulder. This is a head. A potential right shoulder is trying to form around here. I think that again. This is a left shoulder, this is a head. A potential right shoulder is trying to form. If that should happen, this is the neckline or the shoulder line of the head and shoulder. Head and shoulder are bearish reversal sharp pattern. They can reverse an immediate trend from being bullish to being bearish. They can reverse a major trend from being bullish to being bearish. They can reverse a pullback to continue with a major bearish trend. So this head and shoulder that is trying to form here is giving us the sign that a reversal of this immediate trend wants to happen. I've told you before, the forex market is built in traders' favor. If you're patient enough, the market will give you signs when it wants to reverse. The market will give you signs when it wants to continue with a trend. And look at what is happening here. Systematically, the market was building a case as to why it wants to reverse to continue with a major trend, which is bearish. If I zoom out properly, you notice we came into the third touch of this trend line. Principle of price action states the third touch of a trend line does the reversal. And we're trying to form a reversal sharp pattern, left shoulder, head, a potential right shoulder is forming. If that should occur, this is the neckline of the head and shoulder pattern. So what will be the rules of engagement? The rules of engagement will be wait for a breakout. We don't sell at the breakout. Never sell at the breakout. Wait for price to break out, pull back into the neckline, wait for a bounce, a bearish candlestick bounce. We'll go to the 4 hours time frame to refine our entry. We can start selling all the way down here. So we have, this is almost 1,000 pips to the downside. I'll just click the sell button once, close my laptop, go and do other things with my life. There's no point in sitting in front of the trade, part of my system every now and then scanning for trade. Click this button one time, go and spend time with my family, my friends, work on other projects. That's how to trade. Trading should be freedom, not you being a slave to the market, constantly scanning for trade. It is not healthy to your account. It is not healthy to your mindset. As that most of you traders, you start to interpret individual candles at a random level. All right, so once we start coming down here, this is my overall target. But once price comes in here first, I'll be locking in my first position. You know, my second trade, I'll push my stop loss past break even anticipation. My second trade will get to my overall target, which is here. Why will I be closing my first position here? This is a major, I won't say a major area, but this guy can cause an offset as to why we shouldn't get to our overall profit. This guy is an area of concern, and you can actually see we've had several struggles with this area before in the past. We had struggles around this area before. We consolidated for several months around this area. We tried the first time, we failed, tried again, we failed, tried again, we failed, we came back, tried again, we failed. Eventually, once we broke above, we came back, we tested it before actually pushing all the way to the upside. So best believe if we are coming back down here, this guy is likely going to put a fight. So this guy is the evil spirit that will try to prevent us from getting to our overall profit. So I don't know how it will happen, when it will happen, if it will happen. But what I know is when price comes in here, I'll be closing up my first position entirely. Then I'll push my stop loss below where I sold from in anticipation my second trade will get to my overall trade. This is how you trade risk-free. All right, that's it for the euros. All right, so normally when I do my analysis, I always leave out reason as to why my analysis will not play out. So I also jot down my contingency plan in case the market wants to hack left. In the scenario where price comes and break above this area, because you have to understand, we also try to breach above this area before. We failed, we tried again, we failed, we tried, we spike above, close below, tried again, we are currently pointing down. So in this scenario, price comes and will break above this area, we'll start pushing all the way to the upside. So the deciding factor for the euros will be a break below this area or a break above this area. That's it. That's it. Most traders have blown account trading market conditions like this. Most traders, you've been trading this market condition. Today you're in profit, tomorrow you're in losses, today you're in profit, today you're in losses. You've blown accounts. Don't lie to yourself. For the past 1 year, you've been blowing account trading market condition, right? Because traders, what tends to happen is traders make money when the market is trending. Traders tends to give back the money when the market goes into a range. So traders who made money here, most of them lost the money here. Traders who made money here, most of them lost the money here. This is you trading market conditions that are not favorable to you. I'm currently sitting on my hands, allow the market to decide. When the market is ready, it'll come and knock on my door. Say, yo, best, I'm ready. Then I will align myself with whatever the market wants to do. If it wants to break to the upside, all fine and good, we will look for buying position to the upside. If it wants to break to the downside, all fine and good, we're looking for selling position to the downside. No need to beat yourself. No need to constantly sit in front of my system scanning for trade. Hell no. If you go to the weekly, you actually see the head and shoulder pattern that's trying to form. This is the left shoulder, this is the head, this is the potential right shoulder that is trying to form. Most traders have blown account trading. Look out, this is a mess. This is the mess. This is what you've been trading. This is what you've been trading for the past 1, 2, 3, 4, 5. For the past 5 months. This is what most intraday traders and scalpers have been trading. I mean, just wait for the right shoulder to form. Once we take out this downside, we are coming down. But in this scenario, we'll break above here. We'll just push all the way to the upside. Now, I know most of you traders, you can't sit on your hands when the market has gone into your range, and you just want to look for trades. So I'm going to help you see if there are any tradable opportunity on the lower time frame that you can actually jump on. If I'm looking at this from the daily time frame, you actually see we are currently pointing that this is a double top that's occurred on the right shoulder, and this is the neckline of that double top. Like I told you earlier on, bearish reverse or sharp pattern. They can't reverse an immediate trend or a pullback to continue with a major trend. If this double top stick, we can start pointing all the way to the downside. So the goal of engagement will be you waiting for the breakout of this level. Wait for the breakout of this level. Don't slap the breakout. Wait for price to pull back into this level, wait for a bounce, or you can go to the 4 hours time frame. If wait for a bounce at the 4 hours time frame, you can start selling all the way down here. One price comes in here, you want to lock in your first position entirely as profit, then push your stop loss past break even anticipation. This is the neckline of the head and shoulder pattern. This is the left shoulder, this is the head, this is the right shoulder, this is the neckline. So once price comes in here, I will advise you close all of your position entirely as profit while this guy is here, because you can come here, form a base, and start pushing all the way to the upside. So that's it for intraday traders who can't sit on their hands, wait for the breakout of here, a pullback into here, a bounce of here. We are coming all the way to the downside. One price comes in here, please close out your profit entire, close out your position entirely as profit, because this guy can cause an offset and price can just start pushing back to the upside. The worst thing that can happen to you as a trader is you being in a lot of profits only for price to come into an area of resistance or into an area of concern, or because you can't see it, price just reverse and all your trade turns from positive to now negative. That's the worst thing that can happen to you as a trader. Now let's look at something else, something different from the euro. Let's look at GBP/USD. GBP/USD is also similar. I'm anticipating a reversal to the downside. If you look at GBP/USD, you notice this immediate trend has run into a major area of resistance, which is here. I'm also trying to form a reversal sharp pattern known as the head and shoulder pattern. This is the left shoulder, head, right shoulder. All the dollar based pair is giving us a reversal sharp pattern to the downside. It looks like the dollar wants to be strengthening. Here that should happen. All the other major currency pair will experience a reversal to the downside. That is, the euro will experience a reversal to the downside. GBP/USD will also experience a reversal to the downside. AUD/USD, NZD/USD will all experience a reversal to the downside. So if I'm looking at this from the monthly time frame, this is looking like a left shoulder, as I'll call it, a right shoulder, a head, a potential right shoulder is also trying to form. If that should happen, this is the neckline of the head and shoulder pattern. So wait for a breakout, a retest. Also wait for a breakout. Wait for a breakout. Wait for price to pull back. Wait for price to. What happened to my what happened to my lines? What happened to my lines? The lines keep running. Pardon me, guys. Let me get the line straight properly. Cool. Wait for the breakout. Don't sell out the breakout, so you're not prone to market manipulations and fake out. Please don't never sell out the breakout. Wait for price to then pull back into this level. Wait for you bounce. Once you bounce, go to the 4 hours time frame. Draw your waves at the break of your counter trend line. You can start selling all the way to the downside. So we have all this space to work with. We have all this space to work. It is almost 1,000 pips to the downside, if not 1,000 pips to this downside. We have all this space to work with, but this area will be the first area where I'll be closing out my first position before pushing my stop loss past break even on my second position. In anticipation, my second position will get to my overall target, which is somewhere around there. I'm also mindful of this trend line. Okay, I'm also mindful of this trend line. Why am I closing out my first position around there? If you look left, you will notice we had interactions with this area before. Struggle, we have struggles, we have struggle. So if we are coming down, this guy is likely going to put out a fight as to why we might actually come down here and start pushing all the way to the upside. So if this head and shoulder pattern occur, that will mean this immediate bullish trend will reverse to continue with the major trend, which is bearish. You have to understand this is an immediate bullish trend moving against a major trend, which is bearish. For the sake of principle of price action, I'm going to tell you why this trend is bearish. So this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, this is a new lower low. In a downtrend, price should be creating lower lows and lower highs while maintaining the high. So this was the last high that has not been broken yet. Until price comes and break above this high, This is just an immediate trend moving against a major trend. A break of a trend line is not a change in trend. I've said that before in my previous video. Trend lines are technical tools, not market structure. So until price come and break above this area right here, whatever is happening here is an immediate trend within a major trend. So the deciding factor will be the break below this area. We are selling, but in this scenario we start pointing up and price come and break above this area, the whole sell setup has been violated. We might actually experience a push to the upside. Don't worry, as traders we are reactors. We react to what the market is giving us. If the market wants to break to the upside, I will come out here, realize the market, will be looking for buying position. But if the market comes and break out from the shoulder line or the neckline of the head and shoulder pattern, we'll be looking for selling position to the downside. Not to beat yourself. We react to what the market is giving us. We don't force the market. When the market is ready, it will tell us, well, though I'm favoring this market to the downside to the tune of 70%. I'm also favoring this market to the upside to the tune of 30%. So the route of engagement will be wait for the breakout of the neckline of this head and shoulder pattern. If we break below, pardon me, let me take out this line. I applied myself a cleaner shot. So this is the left shoulder, this is the head, this is the potential right shoulder trying to form, this is the neckline. If we break below here, a retest of here, we are coming down all the way here. If we take out this level, we are coming down. So we have all this space to work with. So that's it for GBP USD. Now let's look at AUD USD. AUD USD has done its madness and pretty much made money for the AUD USD. If you've been following our channel very religiously, you know we've made money from the breakout of this bearish trend line. AUD USD has been bearish since 2019. We'll be trading below this bearish trend line. Once we broke above it, we jumped in for it, but it wasn't just a simple breakout. Pardon me, I have not been going to the past. I've spoken about this trade before in the past. There's a video for that. You go and watch how we made money. But once we broke out from here and we knew for a fact our next target was somewhere around here. Let me zoom in properly. Once we came in here, we don't want to know if price will break above here and keep pushing to the upside, or if it will reverse to the downside. But what we know and what we did was we closed out our position entirely around this area. Why so? This is a major area of resistance. It has the potentiality of reversing all the way to the downside. So we don't know how we are breaking above here or we are reversing all the way to the downside. We just close our position entirely, allow the market to decide if it wants to break to the upside or if it wants to reverse. And if it's by zooming properly, you notice we broke above here. Immediately we had this bearish engulfing candle close, and at the opposite direction we now have this bullish engulfing candle. So this bearish engulfing candle close around this area didn't really signify rejection this time, rather it signified profit taking. Investors close position here as profit, hence this bullish engulfing candle. But for me, once I see price breach an area and immediately we have a bearish engulfing candle, immediately I come and put a level around that area and say to myself, if indeed we want to keep pushing to the upside, price should come and close above the last week or the last close of the candle. And you can see we're having issues. Okay, the daily will paint a better picture. You can see we're having issues breaking above this area. We tried the first time, we failed. This is the weekly candle, right? First week closed below here, second week closed, third one didn't really, these three candles are not really convincing to me. These three candles are not really convincing to me. Hence the reason I have not touched AUD because these three candles are not convinced. This high is not higher than this. This high is not significantly higher than this, or this high is not significantly healthier than the previous high. So it's possible the market can start reversing all the way to the downside. So for AED USD, I'm going to sit on my hands, allow the market to decide what it wants to do. If the market is ready to pushing all the way to the upside, it has to give me a concrete reason as to why it wants to push to the upside. But for now, AED USD, I'm going to sit on my hands. Let's look at the last pair, which is NZD USD. Then we'll call it a day with NZD USD. So far, if this analysis has really been impactful, please do smash the subscribe button, the bell notification, and also drop a comment regardless of whether you're having confusion or you just want to tell us kudos, whatever. Drop it at the comment section. Best believe I will reply your comments. I have to state very clearly, I'm so tired, I'm so exhausted. Today has really been a very stressful day. The last episode we dropped was 9 days ago. Why didn't I drop a new episode from the past episode I dropped? You just have to understand the market has been in a very nasty range. The market has been slow, the market has been sluggish. There's no point coming here blabbing about the same shit over and over again. It's just so tiring. But I just feel a sense of I owe you guys the responsibility of you not blowing your accounts, because most of you trade, I believe, will be forcing trade during this period, but you not knowing the market has gone into a period of where there is no trade and you should sit on your hands. Hence the importance of this video. All right, so let's look at the last pair, which is NZD USD. NZD USD, we've anticipated a rollover to the downside to continue with the major trend, which is bearish. So we had price run into a major area of resistance, which is this area right here, which also in confluence with this trend line. We've come in and we retreated around this trend line. So not only do we have price run into a major area of resistance, price also ran into a major area of trend line resistance. We have trend line resistance, normal resistance. We also have a sharp pattern that occurred on a major time frame. This is a double top, first top, second top. And if I draw my Fibonacci from swing low to swing high, you will realize price came rightly into the 61.8 Fibonacci level. Fibonacci are retracement level that technical tools, and the 61.8 Fibonacci level and the 50% Fibonacci level as the most potent reversal level. They can reverse an immediate trend to continue with a major trend. They can reverse a trend from being bullish to being bearish. They can reverse a pullback to continue with a major trend. So you can see we had confidence as to why we should be looking for selling position to the downside. We have normal resistance, trend line resistance, we have sharp patterns, we have candlestick, we have Fibonacci, all coming, all giving us a confidence as to why we should be looking for selling position to the downside. So on the weekly, you can actually see this is an immediate trend. This was the double top, we've broken below this second top of the double top, broken below here. We'll try pushing all the way to the upside. I think, be clear, this was the last episode I dropped. We were anticipating a rollover to the downside, somewhere around this level. We are anticipating a rollover to the downside, and I remember stating clearly the rules of engagement will be wait for the breakout of here. Never sell at the breakout. Never sell at the breakout. I always said on my channel, wait for the breakout of here. Wait for price to pull back into this level. Wait for a bounce. Draw your counter trend at the 4 hours time frame. You can start selling at the break of your counter trend line. You can start selling all the way down here. But what happened is we faked out, broke above here, and we started having some bullish engulfing candle, which I also stated clearly on the last episode that once you start seeing some bullish engulfing candle play around the air, the old sell setup has been violated, and we can start pushing all the way to the upside. And what happened is, let me take out of this. I pipe myself a cleaner shot. We had price push all the way to the upside, but also failed to breach above this area. So what that means is it looks like NZD USD is now finally ready to continue with the major time frame, which has told us look for selling position to the downside. On the 4 hours time frame, you can actually see the interpretation of what has been happening around this area and the immediate bullish trend within the major trend, which is this one. Let me be very honest with you guys, so you don't end up blowing your account. In the scenario where price comes back here and take out this trend line, don't start clicking sell button yet, because we can break out here, hit this trend line, start pushing all the way to the upside, or we can break a little bit to the trend line, start pushing all the way to the upside. Okay, wait for price to come back here. This was the area we planned selling from before, and this was the area price started pushing all the way to the upside. So wait for price to come back here, wait for the breakout of this level, then wait for the pullback into this level, wait for the bounce around here. All right, you know how we trade. Wait for a break of your counter trend line. Don't sell at resistance, please. Wait for your candlestick bounce around here, draw your counter trend line. The break of your counter trend line, you can start selling all the way down here. One price comes in here, lock in your first position, then push your stop loss past break it. I was telling you why you have to lock in your first position right here, and why you have to push your stop loss past break even, so price can get to your overall target, right? But never sell around. Don't sell around this area, please. I beg you, don't sell around this area. It's possible you can come down here. Yes, it's possible. Is it possible? It is. But it's also possible because can manipulate around this area and start pushing all the way to the upside. So never sell or buy around here. If indeed you want to come down, let price come and take out this level, pull back here, you can start selling all the way to the downside. So pardon me, let me take all of this, let me clean all of this off. I'm so tired, guys. I'm so tired. It has been it's really been a rough day. So why am I saying we should close at our first position? This was the level I said we should close at our first position. So this was the level I said close at our first position. This guy is here. We have what number one reason we have this trend line, descending trend line coming from the bottom. We have the descending trend line coming from the bottom. That's number one reason. And if I go to the weekly, you'll notice this was the monthly. You'll notice on our way coming down here, this area stood. This was the area price came for. We had a rejection around this area, we pushed up. On our way coming back here, we also had a rejection around this area, we pushed up again. So it's possible you can come here and also reject and start pushing all the way to the upside. So once price comes in here, you want to lock in your first position entirely as profit, or use a trade stop, anticipation price will get to your overall target, which is somewhere around here. Now in the scenario that we start, price comes and break above this trend line, this bearish trend line, it's possible we can also come here. That means the wholesale setup has been violated. If price break above this trend line, or the wholesale setup has been violated. All right, that's it for today's episode of the Forex Weekly Insight. I hope this segment or this episode has really been impactful. Sorry, I'm so exhausted, I'm so tired, and think I'm a little bit feverish, so I have to cut the video around this area. Please, if this video was really helpful, please do hit the subscribe button, the bell notification. I'll be catching you guys in my subsequent video. Peace and love.